Welcome to TradeLog AI Academy. In this lesson, we're focusing on pullback continuation, how to recognize a healthy pullback and avoid mistaking a reversal for a dip. The goal is simple: trade with structure, not with hope. By the end, you'll have a clean scan you can repeat on every chart. A pullback is a temporary pause inside an established trend, not the trend ending. In the diagram, notice the higher high forms, then price pulls back and creates a higher low, and that's what keeps the trend intact. A healthy pullback creates a discount entry where you can join the dominant direction with defined risk. Your job is not to predict. Your job is to recognize the structure. Here's the critical distinction. A healthy pullback is controlled. It respects structure, and its most likely outcome is continuation. A dangerous reversal is aggressive. It breaks structure, and it often becomes a longer-term change in direction. This slide is your mindset reset. You are not buying red candles. You are buying structure holding. Structure is the first filter, non-negotiable. In an uptrend, a pullback must form a higher low, and price cannot close below the most recent protected low. In a downtrend, the pullback must form a lower high, and price cannot close above the most recent protected high. If the protected swing breaks, it's no longer a pullback continuation thesis. Now we read the quality of the pullback through candles. Healthy pullbacks usually show smaller bodies, overlap, and wicks, meaning momentum is cooling, not flipping. You'll often see selling pressure slow as price approaches support. Dangerous pullbacks look different. Large, impulsive counter-trend candles, strong closes through key levels, and little resistance from the dominant side. Candle behavior tells you whether it's a pause or a takeover. A pullback is only healthy if it happens at a logical place to hold. The chart highlights a zone of interest, where the market should defend if the trend is real. Key zones include prior structure through polarity, where old resistance becomes new support, dynamic areas like moving averages, the slide references the 50 MA, and trend lines acting as a boundary. The question to ask is, where must it hold for my idea to remain valid? Healthy doesn't mean any pullback is fine. A trend is invalidated when its core structure breaks. In an uptrend, invalidation is a close below the most recent swing low. In a downtrend, it's a close above the most recent swing high. The diagram shows a healthy depth versus the red X invalidation. If structure breaks, stop calling it a pullback. It's the beginning of a potential reversal. This is where traders get trapped. A sweep and reclaim is a wick through the level that closes back above, often a stop hunt that can actually signal strength if the level holds. A break and acceptance is different. The body closes beyond the level, and subsequent candles accept lower prices, confirming the level failed. Learn to separate liquidity grab from structural failure. That one skill saves accounts. Do not try to catch a falling knife. You wait for proof that the dominant side is back in control. This slide gives you clean confirmation signals: an LTF structure break, a key level reclaim, a strong momentum candle in trend direction, and ideally, volume expansion confirming participation. You're not late. You're professional. Confirmation is what turns a pullback into an executable setup. There are two professional ways to enter, and each has trade-offs. The aggressive entry at the level gives you the best price and best RR, but it fails more if the level breaks immediately. The confirmed entry costs you some price, but it increases probability because you have evidence of defense and continuation. Your job is to choose the model that matches market quality. Strong, clean trend can allow aggressive. Mixed conditions demand confirmation. Stop loss is not a random number. It's tied to your thesis. The thesis here is, the trend will continue by forming a higher low. Therefore, the logical stop is just below the swing low of the pullback, your invalidation point. If that level is hit, the market proved you wrong. Good. That's disciplined risk management. A complete trade plan defines exits before you enter. This slide lays out 3 target types. First, the prior swing high-low as the conservative T1. Second, the next major liquidity zone where price may react. Third, a continuation leg projection, a measured move based on the prior impulse. Targets keep you systematic. Otherwise, emotions will manage the trade for you.
These are the behavior errors that ruin good setups.
Mistake 1. Chasing price with FOMO. Fix it by waiting for price to return to your predefined level. No level, no trade. Mistake 2. Selling a healthy dip out of fear. Fix it by trusting your invalidation level. The trend is intact until structure breaks. Mistake 3. Buying the level blindly. Fix it by demanding confirmation and letting price prove the zone is defended.
Here is your repeatable process.
1. Identify the main trend on the higher time frame. 2. Locate the key zone where it should hold. 3. Confirm pullback structure is intact. 4. Read candle behavior, controlled or aggressive. 5. Wait for a trigger. 6. Define invalidation clearly. 7. Set logical targets and make sure RR is favorable to the first trouble area. If any step fails, you pass. Discipline is a strategy. This is the core logic to remember. Healthy pullback equals controlled price action that holds structure. Reversal equals acceptance against the trend and a structure break. Keep it that simple, and you will stop overtrading and stop forcing entries. Log each setup in TradeLog AI so you can audit whether you followed the rules and improve your execution over time.